Good evening, everyone. Time for another silver update. This is the daily chart of gold provided by netdania.com. You can click on the link below. Now you can see with the resolution of the debt ceiling debate, of course, going to the president, who just had to push hard enough by implying that the food stamps, Section 8, and Social Security would be cut off. Pretty much the Republicans folded, but we always knew that was going to be the case. Now gold is starting to rally, and you can see here the crossover of the MACD on the daily. Pretty big move there. Silver doesn't quite show the same type of move, but we know that silver always pretty much follows gold. So it looks like this may be the beginning of a rally. We never know because there are always smackdowns that just appear out of nowhere. But it does appear to be some type of bottom. Now with gold on the weekly, we can see that the MACD is correcting back to touch itself, but it's still way down below the zero line. It's still actually lower than the lowest low that it has ever hit. So there's a long ways to run for this MACD to even get back to the zero line. If we get a steady move from here, which is quite possible with this agreement, although it's just a kick the can down the road agreement, but pretty much an agreement that we're just going to go deeper into debt. Now, the money market funds supposedly have had massive outflows due to the fear of a default. As I pointed out before, default was never on the table. The only reason there would be a default on the debt is if they chose to default on the debt. It has nothing to do with the debt ceiling because there's plenty of tax money to pay interest on these notes. So that was just a scare to obviously raise the debt limit, grow the government some more. So let's read a little bit of this and you'll see the spin. U.S.-based money market funds assets recorded their largest one-week decline since August 2011 as investors pulled $43 billion out of fear over a possible U.S. government default. Data from Thomson Reuters Lipper Service showed on Thursday the outflows from money market funds, which invest in short-term securities such as short-dated U.S. Treasury bills, came ahead of the crucial deadline to raise the nation's $16.7 trillion debt ceiling. Without a debt ceiling increase, the government would have faced a default on its IOUs. Now that's an outright lie. Including some of those very same short-term treasuries held in those money funds, which traders feared would wreak havoc on the global economy. And then it goes on. So a bunch of nonsense from the mainstream media. We know they're just pretty much organs of the government, and they just say what the government wants them to say. Now, a question one might ask is, if all of this money was pulled out, then where did that money go? Did they deposit it in the banks? Did they put it into stocks? It's still one gigantic paper Ponzi scheme, and I have a hard time believing that the people who had their money in money market funds, which tend to be the most conservative, pulled it out and put it into the banks, the stocks, some other treasuries. So doesn't make a lot of sense, and you have to remember that a lot of this stuff is just propaganda. The Republicans, a lot of people believe the Republicans were set up. I don't believe the Republicans were set up at all. I believe the Republicans are a part of this game, this gigantic grow the government game. You've got a good cop and a bad cop. We already know what the result is going to be. They're going to run this train off the tracks. They're going to raise the debt as high as they possibly can until the whole thing collapses. We know that's the case. That's what I predicted, and that's exactly what happened. Now, let's go to some user questions. The first one is from Jovan Biljon, I guess is the name, and it's a reference to this article. Brother John F., I came across this article. I'd like your thoughts. Seems somewhat credible after all the articles about FEMA needing supplies by October 1st, and now Lindsey Graham claiming a terrorist nuclear attack. And I'm not going to click on the article, but it goes to something talking about a potential terrorist attack. Now, we know from the various attacks that have happened in the past, whatever false flag or terrorist attacks that we've seen, there definitely have not been any warnings ahead of time, so I seriously doubt this one. We see these types of scare articles and stuff all the time. I really don't put any credibility in that. If there is going to be a terrorist attack and there is going to be some big false flag thing, I don't think you're going to hear anything about it beforehand. It's going to take everyone by surprise. And next question. 170,000 tons of gold in the Bank of Hawaii. This is from Vijay Nathani. In this YouTube video from about 14 minutes, Karen Hudis says there are 170,000 tons of gold at the Bank of Hawaii. Is this true? Thanks. And this is the interviews. Let's play that real quick here.
You never told me in the first part. Should we be buying gold?
Well, yes and no. I think gold is probably a wise purchase right now, but more as insurance than investment, because there's actually a great deal of gold. There's even more gold than people know about. For example, the amount of gold that's in deposit in the Bank of Hawaii is 170,000 tons. This is more than the World Gold Council says is available for all the gold on Earth. People don't know how much gold there is. There's a lot of gold.
Are you buying gold?
I did actually, yes, but not because it's an investment, but because I'm not 100% certain that we're going to get our act together before all of the paper fiat currency falls apart. So I see it as insurance, but
okay, so there's the statement that everyone's talking about. Her claim is that there's 170,000 tons of gold at the Bank of Hawaii. Now, she doesn't give any sources for that. There's no way to verify that. We know that the reported amount, you can see here from this Wikipedia on gold, that a total of 174,000 tons of gold have been mined in all of human history. So that's roughly the same amount she's talking about. So in essence, what she's saying is that we only know about half the gold that's been mined. The other half hasn't been reported. I don't know if that's Yamamata's gold or what she's referring to. There's no basis for investigating that. But I would say, first of all, even if there is this gold, which I don't think there is, but even if there is, then that means there's twice as much gold as we thought. Now, let's go over to this article from Gold Eagle, and again, this is from David Zerbuchin, and it's silverinscripture.com, but this is just his analysis. It's a pretty good analysis, and it goes through world production and things like that. Basically comes to the conclusion that the grand total of all silver mined, we're talking about 42 billion or so, and then the grand total of all gold mined is about 4 billion or so. So he comes up with a 10.5 to 1 ratio. So if we go by Karen's information, then it would go to about a 5 to 1, 5.5, 6 to 1 ratio. And meaning that gold is not as rare as we think it is. I really don't believe that, and one of the reasons why is because pretty much throughout all history we found that the ratio coming out of the ground has been that 10 to 1, and I just don't see how all that gold could have been accumulated and not skew that. Also, what is very difficult to swallow is the argument that that the United States is the one that controls that gold. Why would the United States not use that gold for any number of things? I guess there could be good reason for that, but I just have a very hard time believing that the United States has all that gold. Why would China be spending all this money to accumulate the gold that they're accumulating when the United States has the vast majority of it? It just doesn't pass the smell test. And the last question is how much is silver worth, part 2 from Miojo. And hello again, brother John. You responded to my question. You said that we need no altruistic and economically sound entity, and what we do need is a free market. I'm guessing you missed my quotations around the market and the overall point I was trying to make. If no respected, organized, well-funded, and politically founded source, aka altruistic and economically sound entity, will support or allow, or even ever you need to set it up, a free market, then where does the silver price come from? No one is allowing it now in history. How long is the transition from controlled to free? I'm guessing that any silver I have will have dust on it long before I need to get through this transition to a world where free markets exist again. I'm still looking forward to your Silver in the Bible video series. Now, I am going to do that. I just haven't gotten around to it. But this idea that we need governments to have free markets really isn't the case. We need governments to stop interfering in free markets. But ultimately, you have to ask yourself the question, who do you believe is more powerful? What do you believe is more powerful? Do you believe that ultimately markets are more powerful than governments, or do you ultimately believe that governments are more powerful than markets? Now, obviously, I'm in the school that believes that markets are more powerful than governments. I think I can demonstrate that by looking at history, the failure of Russia, the failure in China, the failure of any government that has attempted to control markets and have central planning. And history has shown that ultimately those attempts fail, and the free market will out in the end. I absolutely believe that. If I didn't believe that, I wouldn't believe in stacking silver. I don't think that the silver market needs the government, and that's why I've never really put much stock in the CFTC stories and Bart Chilton being a hero and all this stuff. I don't have any confidence in the government doing what's right until they're forced to do what's right. And that happens when the market forces them. Ultimately, the market is going to force a resolution of the U.S. debt situation, which is going to result in the collapse of the U.S. dollar, potentially the U.S. economy, and potentially the world economy. The market is going to force that. The market's going to force a free market in gold. Whether that free market is a black market for gold and silver into a transition to a official free market, I don't know. But ultimately, the free market will out, and the manipulators are going to lose. So a big day today in the gold market because we got that crossover of the MACD on the daily. Quite a big move up, and of course the S&P 500 went into new highs. I'm still expecting a turn down because I expect that ultimately real assets will gain and paper assets will lose, but the cheering and the shouting now is going on because they managed to get past this impasse. But again, they just kicked the can down the road to the beginning of next year. We're going to revisit this thing again. As I've said before, the best thing the Republicans could possibly do is just say, well, we disagree with the policy of continually raising the debt, but we'll go ahead and let you have your way, and we'll see what the result is going to be. Instead of continually being a scapegoat, which the Republicans are so bad at any type of political maneuvering, any type of representation of the conservative wing, you have to believe, at least I do, have to believe, that the Republican Party is controlled by the same people that control the Democrat Party. It's really just a big charade, and they need some scapegoats when they're trying to increase the size of government, and if they don't get their way, they can blame their scapegoats. So that's what I believe has just happened. They've kicked the can down the road again, but ultimately free markets will out, and that debt accumulation cannot go on forever, and that which cannot go on forever won't go on forever. Ultimately, it's going to end. And we'll talk to you next time.